somewhere on a silver chart that most retail investors never look at. A triangle just broke, not a rumor, not a forecast. A technical structure that took months to build, quietly, methodically, finally gave way. And the level that sits at the other end of that break, $63. That number isn't random. It isn't someone's wishful thinking. It's a price point that the data, the history, and the market structure have been building toward. And whether silver reaches it, fails at it, or blows through it, will tell us something very important about where this market is actually headed. Stay with me for the next few minutes, because what we're about to break down changes the way you read silver's price action entirely. If you're new here, this is Silver Signal. We cover the silver market the way it deserves to be covered, with data, historical context, and zero hype. If that's the kind of content you've been looking for, subscribe right now and hit the bell so you don't miss what's coming next. The silver story is moving fast, and you want to be ahead of it, not behind it. Now let's get into the triangle. A symmetrical triangle on a price chart is one of the most reliable continuation and breakout patterns in technical analysis. It forms when price action compresses, making lower highs and higher lows, essentially coiling like a spring. Each time price approaches resistance, sellers push it down. Each time it approaches support, buyers push it back up. The range gets smaller, the tension builds, and eventually, one side wins. Silver has been forming exactly this kind of structure. For months, the price has been squeezed between two converging trend lines, testing overhead resistance, bouncing off floor support, and gradually compressing into a narrower and narrower range. Traders watching this pattern knew a resolution was coming. The question was always direction, and now that break has happened. Here's where it gets technically significant. When a symmetrical triangle resolves to the upside after a sustained period of compression, the measured move, the price target derived from the height of the triangle at its widest point, often gives a projection that aligns with key historical resistance levels. In this case, that projection points toward the $60 to $65 zone. With $63 sitting squarely in the middle of that range, it becomes the level that the entire setup is pointing at. But here's what most people miss when they focus purely on chart patterns. Technical analysis doesn't work in isolation. A breakout from a triangle means very little if the fundamentals don't support it. What makes this particular setup compelling, genuinely worth your attention, is that the technical picture and the fundamental picture are telling the same story right now, and that alignment is rare. Let's talk about what's underneath this breakout. COMEX registered silver inventory, the physical silver available for delivery against futures contracts, has been on a steady decline, not a headline-grabbing collapse, just consistent, structural tightening, the kind of quiet inventory erosion that precedes significant supply pressure. At the same time, open interest in silver futures remains elevated. More paper contracts, less physical silver to back them. That imbalance creates fragility in the market structure, and fragile market structures, when they resolve, tend to do so with force. Add to that the demand picture. Silver's industrial consumption has structurally changed. Solar panel manufacturing, EV components, advanced electronics. These sectors have created a baseline demand floor for silver that didn't exist a decade ago. And unlike investment demand, which can shift with sentiment, industrial demand runs on production schedules and supply contracts. It doesn't pause because the price moves. If anything, it accelerates purchasing when price signals suggest future tightening. This is why the $63 level isn't just a chart number. It represents a convergence point, where technical momentum from the triangle break meets fundamental supply pressure, from tightening inventory meets structural industrial demand that isn't going away. Now let's go historical, because this is where the story gets genuinely interesting. Silver has experienced major triangle compressions before. In the period leading up to the 2010 to 2011 rally, when silver ultimately ran from roughly $18 toward $50, the price action showed extended consolidation followed by a decisive breakout that initially looked modest. Most investors dismissed the early move. They waited for confirmation. By the time confirmation felt comfortable, the move was already well underway. The same dynamic appeared before the 2020 silver surge, when silver moved from under $12 to nearly $30 in under 4 months. The compression that preceded that move looked, in real time, like sideways stagnation. In hindsight, it was the coiling of a spring. This doesn't mean history is about to repeat. Markets are more complex than that, and no chart pattern guarantees anything. What history does tell us is this: when silver builds a major compression structure, resolves it with volume and conviction, and does so against a backdrop of tightening physical supply and growing industrial demand, the subsequent moves have historically been significant. $63 is the first major test. But here's the question that actually matters. What happens at $63? There are really three scenarios worth thinking through carefully. Scenario 1. Silver approaches $63, finds strong resistance from commercial hedgers and institutional sellers taking profits, and pulls back into a consolidation range. This would be a normal retest of the breakout and wouldn't negate the larger structure. It would just slow the timeline. Scenario 2. Silver approaches $63, briefly tests it, and then breaks through on volume. That kind of momentum break through a major technical level often triggers a cascade. Stop orders get hit, short positions get covered, momentum traders pile in. The next resistance level above 63 sits significantly higher. This is the scenario that shocks most casual observers who weren't watching the triangle build. Scenario 3. The breakout from the triangle fails entirely. Price reverses back into the range, the pattern is invalidated, and the setup resets. This is a real possibility, and anyone who tells you otherwise doesn't understand risk management. Failed breakouts happen. What matters is how you interpret them and how you're positioned relative to your own risk tolerance. The point isn't to pick one scenario and bet on it. The point is to understand that silver is at a structural inflection point right now, and inflection points are where fortunes are made or missed, depending entirely on whether you're paying attention. What the smart money is doing right now isn't shouting from rooftops. It's watching the volume on the breakout. It's watching where the COMEX inventory continues its decline. It's watching where the COT data shows commercial shorts beginning to cover. It's watching the gold to silver ratio for confirmation signals. These are the instruments of serious market analysis, not the price ticker alone. And if you're someone who holds silver, physically or through a financial vehicle, understanding this structural moment gives you something more valuable than a prediction. It gives you a framework, a way to evaluate what the market is telling you in real time rather than reacting after the fact. The triangle has broken. The $63 level is now on the map. What happens next will depend on fundamentals, macro environment, institutional positioning, and the kind of market psychology that plays out in real time. But the setup is live, the signal is real, and the window to pay attention before this becomes obvious to everyone is right now. If this kind of data-driven silver analysis is what you've been looking for, share this video with one person in your network who follows precious metals. One share puts this analysis in front of someone who might genuinely need it, and I want to hear from you in the comments. Do you think silver breaks through $63 in this cycle, or does resistance hold and reset the clock? Drop your take below. I read every comment and I'll be responding to the most interesting ones. The triangle broke, the market is speaking. The only question is whether you're listening.